I work daily to assist businesses with their insurance and risk management needs. And each and every day, I take notice of misconceptions that exist and circulate in the business insurance industry. Clients and prospects seem confused about similar topics, which I'd like to clear up in today's video. I think it's safe to say that we can all agree about the widespread nature of misinformation in the insurance world. Like most sectors within financial services, consumers are conditioned to understand only the basics of the marketplace.
Back to the basics.
At our agency, we strongly emphasize educating our clients because most of what you're led to believe doesn't touch the surface of where your focus should lie. That said, let's count down the 5 business insurance misconceptions that we work hard to debunk.
Okay, then, let's do it.
Number 5 on the list is a misconception we hear often. Business owners believe they can safely insure their commercial autos on a personal auto policy. This is a myth that we hear all the time.
It's a myth.
Owners may decide to do so to save money or simply because they don't see the need for a business auto policy. But hardworking business people don't realize that this mistake could harm their business and leave them unprotected. First and foremost, it's not necessarily true that a personal auto policy is less expensive than a business auto policy. Then, when considering the expense to the business auto may save many companies compared to the costs of personal auto protection. But most importantly, premium and cost aside, business auto insurance provides level of protection that you cannot achieve through a personal auto policy. Here are some of those protections to keep in mind. Auto liability options that extend beyond symbol 7, otherwise known as scheduled auto only, on the policy. Usually, business auto forms allow policyholders broader form coverage, such as symbols 1 or 2. Further, 2 critical coverage items that all companies with automobile insurance must consider are symbols 8, which is your hired auto liability, and symbol 9, which is your non-owned auto liability. These coverage symbols are attainable at very reasonable costs. And I'll say it again, at a very good cost, and make all the difference in the event of an auto-related loss on your business auto insurance policy.
That's the most amazing story I ever heard.
Most businesses that use autos to operate must provide additional named insured endorsements to their clients when accessing their property with the vehicle. Personal auto policy will not offer these critical endorsements and could cost the business a contract or relationship, lost money, lost revenue, and lost profits. Recently on my YouTube channel, actually I think in the last couple of weeks, I released a YouTube video named 3 Reasons Your Business Must Have Business Auto Insurance. You should go back and view that for further details. I don't want to get too much into the nitty-gritty on this video because I want to speak about the 4 remaining myths that we hear all the time about business insurance policies. 4th on the list is the fallacy that insurance companies deny more claims than they pay. I think that's a widespread fallacy in any type of insurance market, whether it's business insurance, personal insurance. People think that insurance companies are out to deny claims.
That motion will be denied.
That is the furthest thing from the truth. In my experience, a good insurance company looks for language in the policy that dictates that they pay the claim versus the opposite. But it becomes even more important that as a business owner and a policyholder, you understand your protection in the language in the policy. The policy is a contract, and the agreement determines coverage application during a loss. The percentage of claims that insurance companies pay on business insurance policies can vary widely depending on the type of policy, the specific circumstances of the claim, and the insurer's policies and procedures. Generally speaking, insurance companies aim to pay as many claims as possible, but they also must thoroughly investigate and ensure they are valid before paying. Here is some data to disprove the myth that insurance companies deny more claims than they pay. Going back to 2019, this is the latest data I can find on nationwide workers' compensation paid claims from the NCCI. The amount of claims paid was 60%. 60% of claims filed were paid nationwide work comp in 2019. Now, California is governed by the WCIRB, otherwise known as the Workers' Compensation Insurance Rating Bureau, California, not the NCCI. But according to the WCIRB, the latest data I found was 2020, and 81% of workers' compensation claims were paid. 81%, that's a huge number.
Wow, that's huge.
According to a report by the Insurance Information Institute, also going back to 2019, 79% of liability claims in the United States were paid by insurers. 79%. The National Association of Insurance Commissioners, the NAIC, published a report that states that insurance companies paid approximately 57% of all commercial property claims in 2019. The NAIC's data shows that 61% of all business auto liability claims were paid in 2019. And here's the most shocking of all. EPLI, Employment Practice Liability Insurance, is included in the III, the Insurance Information Institute's data on liability claim payouts, meaning that 79% pay rate in 2019 includes EPLI. Now, I recently released a video on my YouTube channel regarding the tightening marketplace for EPLI. So I do expect the number of claims paid within the EPLI product to decrease in 2023 and beyond. But as you can see, according to the data, insurance companies do not deny more claims than they pay. They do not.
They just don't.
I'm going to say this again. Read your policy to understand your coverage and where your protection lies. That will help you put other risk management and loss control protections in place, as you cannot rely on your insurance policy, but at least you know that per the contract provisions. Moving on, let's talk about how red cars cause premiums to increase more than other colors. Okay, that's a joke. That's a misconception. We've heard that for years. I'm not going to talk about that. It's a joke. Third on the list of the top 5 countdowns of the most significant business insurance fallacies revolves around the ever important general liability insurance policy. Many business owners believe that the coverage provided by all CGL policies is the same. And I'm not referring to the limits of insurance or the deductibles. We all know those can differ. People carry different limits, different deductibles. I'm talking about the coverage provided, limited, or excluded by the policy forms and the endorsements in the policy. I'm talking about the guts of the policy.
Where's the guts? Huh?
If you look inside the policy, if you place 2 CGL policies side by side, they would look very similar, but look so deceiving. So I urge you to read your policy. I recently wrote a blog and released a video named General Liability Explained in 10 Minutes. Probably the best 10-minute video that you'll find on YouTube about general liability in 10 minutes.
I think it's the best work I've done.
I go into far more detail about the CGL policy in that blog and video than I will here in this video. But here are a few points to keep in mind when purchasing or reviewing the protections granted by your general liability policy. Number 1, price should not impact your decision. Of course, price is important. It needs to fit into your budget as a business owner. But like price, you should weigh your options as it relates to the forms on the policy. Pay close attention to the endorsements. CGL policies look very similar from the declarations page through the definitions. But if you go past the definitions and get into the endorsements, that's what starts to make differences. Now, if you're a contractor, and we work with a lot of contractors, read the exclusions and the endorsements. We've seen it all. We've seen CGL policies that exclude water damage for plumbing contractors. We've seen CGL policies that exclude projects on homes of 5,000 square feet or more, or commercial buildings on 20,000 square feet or more. It's one thing if you know these exclusions exist and make an informed decision, but don't assume that all options are created equal. Many commercial general liability carriers adopt proprietary or manuscript policy forms, meaning that they are custom designed for a particular industry or insured. They're not the standard ISO forms that carriers adopt from a centralized service. So read and understand the extent of your protection.
Perhaps you should read the instructions first.
Second on the top 5 countdown of business insurance myths that is the age-old legend that business owners can cut their insurance costs by underestimating their exposures. Think again. The opposite is true because insurance companies audit their policyholders after each policy year. Audits are prevalent in workers' compensation, general liability, commercial package, business owner BOPs, and even business auto. In the rare case when your insurance company does not audit the exposures at the end of the term, you can almost guarantee that they will inspect the business at the beginning of the policy or ask you for firm financial data before they issue coverage. If adjustments are necessary, they will do so by adding premium generating endorsements onto the policy that requires you pay more money.
So I've got to pay more money.
Now, you may say that you will take the chances because if they do an audit, you'll pay the same amount at the end of the term as you would have at the beginning. Think again. Insurance companies provide a lower rating basis for businesses with higher exposures. This is especially true regarding workers' compensation net rates. The rate applied at the start of your policy continues for additional premium that comes due at an audit. So don't cut yourself short by costing yourself more money on the rate at the start of your policy because you underestimated your exposures. Nobody knows your business better than you do. So looking at historical trends, estimating your exposures to the best of your ability is going to give your insurance professional the best knowledge they can have to do the best job for you. Such estimates may include your gross sales, your gross payroll, your number of employees, or the number of units sold. Also remember that material misrepresentation can result in policy cancellation, claims denials, or even worse, insurance fraud.
This man, Your Honor, is an acknowledged expert in the field of insurance fraud.
So be careful not to fall for this dangerous myth. Going down to number one, the moment you've been waiting for. The number one misbelief we hear from business clients constantly is that insurance companies never refund premiums due to a policy cancellation, an endorsement, or a final audit. This cannot be further from the truth. State regulation requires that insurance companies return unearned premiums, particularly for carriers filed with the state and licensed to transact. I believe the confusion surrounds our industry because of minimum premiums, otherwise known as MPs, or minimum and deposit premiums, otherwise known as M&D. Minimum premiums apply to most business insurance policies, and minimum and deposit premiums to most surplus lines policies, but not all. Here are some definitions of both of those terms, MPs and M&Ds, that I think are important. The minimum premium is the least amount of premium to be charged for providing a particular insurance coverage. Minimum and deposit premium is a premium that is fully earned by the insurer at the inception of the policy and is non-refundable if the policy is canceled. Now, it's crucial for business owners to understand the impacts of both when purchasing a business insurance policy, because they will have implications on the refunds in the event of a policy cancellation, endorsement, or final audit. Now let's focus about the final audit. Premium refunds are available due to the final audit if the carrier is admitted. Now, as a reminder, an admitted company is one licensed to authorize to sell insurance to the general public. Return premiums resulting from a final audit are typical of workers' compensation policies. However, the refund cannot exceed the minimum premium, and most work comp policies carry a minimum premium. Now, regarding other products or lines of coverage, the availability of refunds at the final audit may come down to the strategy and knowledge implemented by your insurance broker. For example, as I referenced previously, most general liability policies set M&D at 100% when considering the minimum and deposit premium. However, it is possible, and this is a big one, it is possible to negotiate M&D on higher premium policies at, let's say, 90%. So what does that mean? That means that 10% of the annual premium that you pay throughout the term is refundable at the final audit or downward endorsement if you don't meet your projections. This is an example of why a strong relationship with your agent and hiring an agent that understands your business is essential. So keep that in mind when it comes to premium refunds, especially as a result from the final audit. What can FO do for you? I hope you found this video valuable. I hope you found it useful about the 5 business insurance myths that are not true. Remember, please like the video, comment below, subscribe to my channel. I really appreciate your support. We put a lot of emphasis, as I said, on education, and we release a video every single Tuesday to provide that education that our clients and our prospects deserve. Now, because of the emphasis we put on educating our clients and prospects, I'm confident that most of our clients understand that the 5 misconceptions I speak about in today's video are truly just myths. We talk to them about it all the time. Now, if you're looking for an agency partner that cares more about education and doing the best that we can for our clients rather than just simply selling an insurance policy, you should give us a call. Our number is 858-384-1506. You can also email hello@foagency.com. And if you visit our website, you'll find several options to connect with us, whether it's chat, text, email, or web form. Feel free to reach out. We're happy to connect with you. Thank you again for your support, for watching our videos, and we hope to see you on another video soon. Take care.